So once again, we're going to look at some technical industry information about cyber insurance and cyber liability. And as you've seen from prior videos, the common theme from all of this is change and evolution. This is not static, established type coverage you'll see in other lines of insurance, such as general liability or fire insurance. This is a coverage that is dramatically changing. And this article is in Tripwire, which is a great industry publication. And it talks about a year ago, cyber security professionals were locked in a heated debate about insurance. Some were keen to point out the future of the industry would need to include some form of insurance market. Others argued cyber insurance would never be worth the premiums, given the volatile nature of cybersecurity. Think about that. There are experts that said it's never worth buying premiums for this coverage. The pandemic changed all of that. FBI reports cyber attacks increased almost 400%. You've seen our IC3 model in the other previous video. 60% of companies have reported they've seen increases in fraud. This rising threat level seen attacks on companies that were regarded as low risk, especially in mid-sized companies. This has led to a booming market in cyber insurance. We'll take a look at how the market has changed in the last 12 months. Think about that. An insurance market changing over 12 months. Other types of insurance don't change in 12 months. Car insurance doesn't change in 12 years for the most part. Increasing threats. KPMG, which is a major financial accounting firm, discovered that 74% of businesses do not have any sort of cyber insurance. Let's let that sink in. 3/4 of businesses do not have any sort of cyber liability insurance. The ones that do, which is the other 26%, less than half believe their coverage would cover the actual cost of a breach. So let's call it 15% at the highest level of companies believe that they have sufficient coverage for cyber liability. 15%, 85% plus don't. Second report analyzes 1,700 cyber liability insurance claims. Found the 70% increase in the average cost of a claim, security, cybercrime. Changing targets. Well, what's changing? Typical target of a malicious hacker used to be big companies by somebody overseas, state-sponsored criminals, with large corporations rapidly increasing. Changing tactics. Ransomware are on the rise. Mid-sized companies is on the rise. Work from home is a very large threat vulnerability. When people are working in an office, every computer in that office environment has the ability to go through a gatekeeper, a firewall, a server, a cloud login, a VPN, and that can be controlled by the IT department. Where people work from home, now you have them accessing the corporate server, the corporate cloud, from a location that is unknown to the company. And who knows what else is happening. They may be using their home computer that their kid is playing video games on. They may be using a laptop in their bathroom where the Wi-Fi doesn't have a secure password. The password could be admin. So the work from home and remote environment changed all that, and it's not like it's going to go back, right? The work from home is here to stay to some extent. Boom in cyber insurance. Transformation led to a boom market for cyber insurance providers, and companies are recognizing this. The market is relatively young, and policies have yet to become standardized. They're not easily understood by those outside the cybersecurity industry. Think about that. It didn't say easily understood by those outside the insurance industry. It said easily understood outside the cyber security industry. I suspect that there are many insurance agents and agencies, well-meaning, doing the best they can, who don't understand the types of risk and losses that cyber insurance covers as much as they do, for example, car accident or a slip and fall in a business or some other type of traditional losses that have happened for the last 10 or 20 years. there are concerns raised by cybersecurity engineers about what is covered in these policies and what is not, including the fact that most common cause of cyber breaches, employee error, appears to be explicitly excluded. So if a policy says employee error is excluded and most causes are employee error, that means most things are going to be excluded. It is important to have some type of cyber liability policy, even if the only benefit that comes from it is mentorship, guidance, suggestions from your insurer to prevent the policies. Even if you pay premiums, reasonable premiums, and none of the potential losses would be covered, your insurance company is going to give you, hopefully, feedback from other claims that they have seen that will help you prevent future losses and maybe cover part of your loss if you have it. Cyber insurance right now is like nothing we've seen before in the risk prevention industry. It has, functionally zero historical understanding. Even if you go back to 2010, that's only 10 years worth of loss understanding, and even that 10-year period will likely be very much different than the next 10-year period. 2010 to 2020 had losses in a type, range, and also scale that is most likely going to be completely different from 2020 to 2030, which means that whatever models are put in place now may not apply. This said, cyber insurance can be an extremely effective way for small companies to offset the risk, even if it can't be mitigated completely. Very well put. It's an important thing to have, making sure that both the insured and the insurer are able to agree on the reasonable threat profile. Reasonable, that's the key, and agree on what the level of coverage is required. So there's no reason to avoid taking it out. You just want to make sure that you don't look at it like be all end all. If you have fire insurance on your building, you're figuring that if my building burns down, I'm going to get a new building. They'll rebuild it, buy me another one. I'll be 100%. Maybe you pay deductible, but functionally it'll be 100%. You have to look at cyber insurance as maybe not the same type of be all end all, and be more of a partner with the insurer to try to prevent losses in the first place, because nobody wants the loss. Even if the company paid all of your tangible costs getting you back to where you were, the time and expense of putting back together your data might be more of a intangible loss than the actual dollars. Cyber insurance is a huge opportunity. It's a really good thing for companies to look at, because if you are a small, mid-sized company that's looking at putting this loss understanding into your business strategy today, you'll be ahead of the game, because 80-90% of companies won't even be thinking about this for the next 3, 4, or 5 years. You'll be at an advantage. Just like the article said, 76% or 74% of businesses do not have any sort of insurance. 74%. If you are one of the 25 or 26%, you are better than the bottom 3/4 of your industry. And you'll have more likelihood of, if there's a large loss to many companies, of being a little bit ahead of the game. So this is a place that no matter where your company stands, you can be ahead of the game by having knowledge and maybe some type of coverage that you shop around to find a type of insurer that at least has some understanding of what's going on and learns as they go about the cyber liability industry.